I like a big panic event. That's always been a great way to bottom. It's towel throwing, it's capitulation, it's massive volume, it's total panic in the streets, and always a great buying opportunity. What you're going to find in this situation is many crypto operators, particularly lending platforms, have never operated it with such volatility before. So they were in the slow growth from Bitcoin, almost a decade ago, from $800 all the way to 60,000. And all along the way, some of them became really aggressive in using leverage, which is the traditional hedge fund model. Now, what happens, and this happens in equities, it happens in bonds, it happens in real estate, it happens in crypto. Crypto's the Johnny-come-lately new asset class with a whole lot of newbies in it. You're going to see a whole series of these actors get crushed to zero over the next few months. In the contagion of leverage being caught offside with the lack of liquidity. Voyager is not that big a deal. It's kind of irrelevant in terms of, this is a diversified shareholder base. It's not FDIC insured in any way, so it's not putting any stress on the government systems in any way. All the shareholders should consider themselves educated, no different than when you go to Las Vegas, put it all on black, and it's red, you lose. So anything that was built on a business model that is not going to work or can't sustain volatility is going to be gone, and it's a good thing. It's a wonderful thing. It's going to leave the industry much stronger. Yes, we must mourn the investors that got wiped out to zero, but even they are better off in the sense that they've been educated. Well, let's talk about that specifically, because I think it's a great topic, and for several reasons. Reason number one is people think that crypto, the entire sector, is going to get regulated all at once. That's not going to happen. The most likely scenario, and this is a personal opinion, but one I've been working on in Washington, along with others, is that we would like to get policy on just stablecoins first, because stablecoins represent a very powerful and efficient payment system. And we think we can get bipartisan support between both parties supporting the American dollar as a default currency for a global payment system. It's not going to be the Chinese yuan, it's not going to be the Swiss franc, it's not going to be the euro, it's not going to be the British pound. And the reason it would fall and default to the US dollar would be that is the currency used to denominate most commodities. And so the challenge you have right now, and why there's so much pressure to solve this, is it's very inefficient to transfer US dollars over to Geneva, then put it into Swiss francs, and then buy Swiss Nestle stock or whatever it is you want to do over there. It's really slow, very inefficient, very costly, not transparent, and not easy to audit. And so all of that problem goes away with a stable coin. So you've seen even Tether trades below $1, it's 0.999 right now. And so when you break a buck, you lose a lot of confidence. So what I'd like to see happen here is that we regulate stablecoins first because of their utilitarian value within the crypto universe, and that get done in this calendar year. And the reason that might happen is Toomey is retiring, and he is a driving force, as you know, on the Hill, and is really behind this momentum and this bill, and has lots of support from both sides of the aisle. So I think that's good. Now, obviously, what happened to Luna is an example of what not to do. So again, a sad situation, billions lost, but a great education to the market. Algorithm-based stablecoins, I don't think we're going to do that again. I'd rather see something backed by US dollar or assets that are very liquid, that can have duration of less than 12 months. So that makes sense to me. So at the end of the day, the bad ideas get removed by the big spatula. And again, it's unfortunate for those investors that didn't think it through, but not all stable coins are alike, USDC being the leader currently. Now, having said that, if you go look at current yields across the spectrum of duration from 1 month to 12 months, it's only 50 basis points right now. So that's where you need management and compliance and total transparency. And so those who have opened accounts with Circle itself, managed it under corporate accounts, understand exactly what you just disclosed. But also the company is constantly monitoring its margin requirements and exactly what it's got and what it's holding. And if you have an account with Circle, you're getting a constant stream of information answering exactly those types of questions, because they have their brand to protect. They also have that dollar strike value to protect, and they have their corporate accounts and account holders to protect, and they want to do that. They want to emerge from this successful, even though it's been tested with volatility. And I will remind you that recently it was disclosed that both Fidelity and BlackRock each invested $200 million in the Series F of Circle. That is a huge vote of confidence in the middle of all of this volatility. We're talking about the equity of the company. And so they are the most conservative money managers on earth, putting a bet forward on Circle becoming at least one of the regulated cryptocurrencies that are stable. And so at the end of the day, they have the risk too. We all have risk. But if I have to bet, I'll invest beside Fidelity and BlackRock, and that's exactly what I did. It's impossible to know, where the bottom is, but I would say this: I don't believe we've seen the bottom yet, and I have a different view of it. I go back again to other asset classes that I've invested in for decades. In every case, traditional bonds, traditional equities, real estate, alternative asset classes, bottoms are reached with an event, a panic event, as I call it. And you can find it in every asset class. Back in the hedge fund days when they started gating, these large multi-billion-dollar hedge funds that gated, shut down their liquidity, caused panic, and you saw bottoms in equities as they were being liquidated. There's long-term was one of the classics in the last couple of decades. And it was a fund that was over-levered and blew up. We haven't seen that yet in crypto land. There's no big guy has gone to zero yet, and I think that's still to come. Hard to say who it is, because it's going to be because of leverage and some kind of relationship in a counterparty holding that they have not disclosed. And I'm just speculating right now, but that would be very healthy for the market to have that happen. Voyager's too small, it doesn't matter. The rest of these guys were kind of irrelevant in terms of total market cap. Bitcoin and the crypto market itself has almost been cut in half in total market cap. And so you would think we're on our way to the bottom, but I like a big panic event. That's always been a great way to bottom. It's towel throwing, it's capitulation, it's massive volume, it's total panic in the streets, and always a great buying opportunity.